Hi, I'm Pat Keon, a senior research analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, February 26th. We'll start this week's report by taking a quick look at the market activity. The major equity indices all entered correction territory as the growing threat of the coronavirus gripped the market. The NASDAQ Composite Index, the S&P 500 Index, and the Dow Jones Industrial Average all retreated over 12% in just 6 trading days as global pandemic fears took hold. The markets have reacted so negatively because of the potential harmful impact that the coronavirus could have on global economic growth. Specifically, the current concerns rest with the 2 largest economic engines in the world, the U.S. and China. China, the source of the outbreak, has already seen its growth reduced due to the mass quarantines that it had to enact to curtail the spread of the virus. The quarantines have led to factories being shuttered, as well as a downturn in investment. While the U.S. has not had a significant number of cases as of yet, there's already been speculation that a more robust outbreak could lead to a recession. This assertion was made by Janet Yellen, former Federal Reserve Chairwoman, during a speech she gave this week. As speculation about a potential recession has grown, so has the possibility that the Fed may have to act quickly with interest rate cuts to combat this. We'll turn our attention back now to the fund flows results. We'll start by taking a look at looking at the results for this week's fund macro groups. For the week, equity mutual funds and money market funds suffered net outflows of $4.3 billion and $2.6 billion, while taxable bond funds and muni bond funds took in $4 billion and $1.7 billion of net new money. We'll take a closer look at each one of the changes for the asset groups. We'll start off with our equity mutual fund group. The $4.3 billion net outflow was the group's 9th straight weekly net outflow. Domestic equity funds accounted for all the net outflows this week as they saw $4.4 billion leave, while non-domestic equity funds had a slight net inflow of just around $81 million. Among the peer groups, on the domestic side, we saw multi-cap growth funds with the largest net outflow at $1.5 billion, while for non-domestic peer groups, the international multi-cap growth funds peer group had the largest net inflow at $256 million. We'll move on now to our equity ETF group, where the impact of the coronavirus was really felt. Equity ETFs suffered net outflows of $17.8 billion this week. This was the 5th largest one-week net outflow in equity ETF history. Lipper began tracking equity ETFs in 1996 for fund flow data. It's also the largest since the $22 billion net outflow in August of 2019. Not surprisingly, considering the downturn in the U.S. equity markets, the largest net outflow by far this week belonged to the SPDR S&P 500 ETF, which saw $14.5 billion leave. Also tied into the news for the week were the 2nd and 3rd largest net negative flows, as we saw the iShares MSCI Emerging Markets ETF and the iShares MSCI Japan ETF have about $1.1 billion and $790 million of negative net flows for the week. The iShares MSCI Emerging Markets ETF has roughly 50% of its assets allocated to China region stocks, while Japan has also been heavily impacted by the coronavirus. We'll turn our attention now to taxable bond funds, starting with mutual funds. This group, taxable bond mutual funds, had net inflows of just around $4 billion last week. This extended their streak of positive net flows to 8. The most significant net inflows among the peer groups belong to the Core Plus Bond Funds Group and the Core Bond Funds Group, which increased their coffers by $1.6 billion and $1.2 billion respectively. Moving on now, we'll look at taxable bond ETFs. This group had net outflows last week of roughly $1.5 billion. The net outflows were dominated by the ETFs in the high yield peer group as investors moved away from risky assets in this time of uncertainty. This peer group had overall net outflows of $3.3 billion for the week, with the lion's share of these outflows belonging to the iShares iBoxx Dollar High Yield Corporate Bond ETF, which saw $3.2 billion leave. We'll move on now, take a look at our Muni Bond Fund group. Muni Bond Funds ran their streak of net inflows to 60 as they took in $1.7 billion of net new money for the week. This increase brought their total net intake for the 60 weeks to $82.3 billion. As usual, the group was led higher by its national muni peer groups, with the high yield muni debt and the general muni debt peer groups leading the way with net increases of $538 million and $525 million respectively. Our last group to review is money market funds. Money market funds had net outflows of $2.6 billion for the week. The institutional money market funds peer group dominated the net outflows, as they had $6.6 billion leave their coffers. The majority of the money market fund peer groups actually took in net new money last week, led by the institutional U.S. Treasury money market funds and the institutional U.S. government money market funds group at $2.8 billion and $1.7 billion respectively. Wraps up this week's report. If you'd like to take a closer look at the data yourself, please go to our website. It's at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.